What's up, party people? You got to let that song finish out, I guess. When you're that close to the end of a song, it's got to let it finish out. What's happening, everybody? Got some folks coming in from the waiting room. Give them a second. I got some familiar names. I got some new names. What is happening, everybody? Stocks on the rocks, Thursday. Yeah, we got a few more people coming in here, so we'll let them come on in. How's your Thursday so far, everybody? If you can hear me, give me a thumbs up. Give me a yes. Tell me how your Thursday's been. How's your week been so far? One more day. It's been a short week, trading anyway. And then we'll get started here in a second. Hot, Carl. Yeah, I bet, man. You're in Vegas, is that right, Carl? Yeah. Yeah, I bet that's I hear it's hot. My buddy from Scottsdale, Phoenix area just called me. He's like, dude, we got to get by a pool this summer. I can't take it. I'm like, I have a pool. You can come here. What's up, Rainy Charlotte? Ian, we'll get there in 1 second. Let's everybody make sure we got everybody audio tested. Looks like we're good here, but yeah, we'll have a general high level question. 111, goodness gracious. I think it's probably 80 here. I'm not trying to rub that in, but Greg. I was in, I wasn't able to, so Chuck, let me start over. It's been a long day. Chuck Fulkerson, who you guys know and love, um, subbed for me in my Thursday morning trading room, which I have every Thursday, because my son last night was playing in San Diego. Um, and so yeah, he had a show last night. So we went down there with some family and a couple of his friends. And I probably didn't get to wrapping up the evening until about 12:30 in the morning. And then we spent the night down there. So yeah, I wasn't able to host the trading room this morning, but we got back around, I don't know, a couple hours ago, a few hours ago. No, it was a lot of fun, man. Yeah, if you don't know, he plays with the grandson. So he's on tour with John Bonham, who's the drummer for Led Zeppelin. His name is Jason Bonham. He's doing he does this Jason Bonham's Led Zeppelin evening, which if you ever get a chance to check out that show, it's the closest thing you're ever going to hear to Led Zeppelin. Unbelievable show. And my son is in his son's band, so Jagger Bonham. And so they're doing like, I don't know, 5 or 6 dates. They end up at the Greek here, the Greek Theater in LA on my wife's birthday on Saturday, which is so yeah, it'll be a great birthday present to see him play at the legendary Greek Theater. So yeah, so kind of tired today, couldn't actually I couldn't actually imagine waking up in the morning and going, you know what, I want to teach this morning. So I'm happy that Chuck was able to jump in. Hopefully he found some good stuff for you guys. Phil Dillinger of the McCoys did hang on. Yeah, saw one of your friends left us Monday. Yeah, I didn't even know that. Jimmy Page is 81 and supposedly still sounds as good as he did 50 years ago. I believe it. Um, I believe it. The guy who plays for Jason's band, they call him Mr. Jimmy. He looks just like him. If you ask him, hey, what amp does Jimmy use on Name a Song? He would say on which record, on which re on or on which tour, and he knows to the letter which amps and guitars Jimmy Page played on specific records, on specific tours, on live records. It's insane how much he knows, and he sounds and looks just like him, and he's in his early to mid 70s, and he still rips that stage, man. That band is so good. Anyhow, so yeah, coming at you after a long night and a drive home from San Diego, but I'm happy to be here. Thanks for being here. It looks like we have all the folks who are going to come in at least in the top of the hour here to our office hours. So appreciate you guys being here. We do office hours and happy hour. So because I didn't get enough last night, let's just have a little bit more this morning, shall we? Or this afternoon. Happy hour, right? Cocktail time. So, so this is designed to be a session where me or Chuck, if he ever does it, we come with nothing planned to talk about. Whatever we're going to talk about is whatever you guys bring up. And if you guys don't have anything to talk about, then we will we'll call it and we'll give you your evening back. But yeah, this is a session that's just pure open Q&A, conversation based. You have permission from me if you want, just be kind, to be friendly. If you want to turn on your microphone and ask your question and just get into a conversation, we can do that. Just be nice. We used to do this on YouTube, and we had some folks that were not adults. Well, they were adults, but they were acting like children. Ruined it for everybody. So now we just post the recording on YouTube, right? So we'll post a recording on the YouTube. We post it on the website, so you come back and watch it anytime you want. I like to watch Professor of Rock, Adam Reeder, always good stories of all the great artists. Yeah, man. So yeah, there's some good stuff out there on YouTube. You know, a documentary I just watched on this yacht rock, which apparently 70s rock musicians hate the term yacht rock, but it's a great documentary on some phenomenal musicians. Who knew that the guys from Toto played on pretty much everything in the 80s? Abe, question. Do I trade futures, S&P or NASDAQ? I don't, not currently. I did for many years. I've been option trading, Abe, for almost 20 years now. It'll be 20 years in basically at the end of this year, rolling over into 2026. And in the middle there, I did trade futures for a few years, and I hated every second of it. For the primary reason that my personality doesn't really like the high-paced intraday scalping, day trading. And that's what I was learning. That's what I was doing with it. I live in California, so I've got to be up at I got to be up at 5:30, kind of getting ready and prepared. And it's I'm not a morning person. I don't claim to be. I will never claim to be. I never have been. I'm a musician my entire life, and I spent more than, well, I guess, yeah, more than, I mean, probably half of my life staying up until really late. I'm an evening person. I like to stay up late. I don't love mornings as much. Um, and I especially don't love mornings where I have to be really on, which I feel like you have to be when you're scalping and day trading, futures. And so, one of my neighbors, and I was fine at it. I was good at it. It's not like, you might say, well, why don't you just do it? I mean, isn't it good money? I mean, yeah, it's good money, but also, I make money trading options and I make money doing a lot of other things. And so one of my neighbors asked me one day, he said, actually, he didn't ask me. He told me a statement that his dad told him one day, and I loved it. He said, man, he's like, my dad told me one day, do not get good at things you don't like doing. And I'm like, that hit me pretty good. And I'm like, yeah, dude, I hate getting up early. I hate, actively trading and just pressing buttons. And like, I don't know, it just wasn't for me. So I stopped, but I still trade. I still look at futures every day because that's where I get my broad market analysis from. I use futures, but I don't physically trade them. Hey, but if you have a question, I can probably help still. Sounds like a good title for a hit. Yeah, don't get good at things you don't like doing. I mean, there's a song in there somewhere, Bill, that's for sure. All right, Ian, you had a question, high level, general, but high level question. So,
Hey there.
what's up,
What are your
Ian?
thoughts on dollar index uses for high time frame forex stuff?
I
Correlations,
would say,
anti-correlations. Just what do you think? I'm
yeah, I
just
mean, I
looking
would
for more of
say,
an
I mean,
edge.
yeah, I would say there has to be an edge there, right? Because anytime you're trading Forex, that's always paired, not always, but the major pairs are paired to the US dollar. So anytime you're going long one, short the other, or you're trying to find relative strength or relative weakness in any particular currency, the dollar's got to be showing you, generally speaking, some area of supply or resistance or demand or support that can be supportive of your currency trade. Um, I don't think I've maybe ever in my life traded actual Forex. I've traded currency futures when I was trading futures for a little while. I traded some currency futures, index futures, gold and crude oil. Um, but yeah, I would think that there is still got to be an inverse correlation that you can lean on. Uh, I would say very heavily, generally speaking, if you're trading uh, currency pairs paired to the dollar, for sure. How is that what are you trading a lot of Forex now, Ian?
I've been knocking it out the park. Yeah,
And have you been using dollar index correlations?
I'm just looking for more of an edge. I haven't found anything that correlates beyond straight up old school support resistance, draw a channel, draw a trend line,
Sure.
etc., etc. Old school
Sure.
technical analysis and stay the hell away from news.
No kidding, stay the hell away from news. So let me ask you this. So you've been killing it. Obviously there's always this search for more, and I get the question. I need more, is there more of an edge there? Do you feel like you need an edge? I mean, it
Always,
sounds like you have one.
always,
Always looking for more. Never
always.
satisfied, Ian, huh? Can't just leave well
It's not.
alone.
It's not like the guy in the second Wall Street movie where what's your end point, and the answer is more. No, it's not that.
Yeah, one of my trading partners, he's always like digging for more and more and more and more. And I'm like, you just can't leave well enough alone, can you? Always got to make things more complex or complicated or just looking for something. And I'm like, that's great. You take all the time in the world and you do that. And there will always be more. And more is not always more, Sava. More is not always more. Sometimes less is more. I've got folks who have more trading rules and guidelines than any of my closest, five, trading partners or friends would have. And I'm like, why do you have all those? How do you ever get through all of that? Right. And then eventually make a decision. Right. So, but I get it. No, I mean, I would have to imagine, going back to your question, Ian, there is a correlation there. There has to be. Because anytime you have, especially if you're trading currencies paired to the US dollar, there's got to be an inverse correlation there somewhere. Keep an eye on it. Abe says, what stocks do you trade options on? Yes, is the answer to that. You bet. Follow up, your average holding period. That really depends upon the actual strategy I apply. Trade straight calls and puts, never. So let me kind of break all this down for you, Abe. Great questions. So I'm going to pull up my platform here, Thinkorswim. You guys should be able to see it. So I trade options in Thinkorswim in my personal accounts, in my family accounts, and then I trade options in Interactive Brokers for the hedge fund. Um, and so when I wake up and I'm ready to search for trades, I don't go to any particular stock. In fact, I don't even care what the stock is, what they do for a living, if their fundamentals are profitable, if they're cooking the books. Or I really don't know half of that, half the time. Obviously, some names I know what they do because I've been doing this for 20 years, but a lot of times I'll come across a ticker symbol and I'll say, what do they do? And I have no idea, right? And I don't really care about that, right? I care, is there structure in the price chart? Are there are there um are their options liquid? And are the spreads tight? And that's all I really care about. And so what I've done is I set up a scan, and in this platform, it gives me the ability, and I kind of modified this scan for a class recently. So let me get this back to my actual scan. There we go. So I'm looking for stocks that trade between $7 and $1,000. I'm looking for open interest across the options chain to be 12,000 contracts or more. Average volume where the stock itself has 1 million shares traded a day on average over the last 50 days. And don't show me stocks that have earnings coming up in the next 10 bars or 10 days. And so that'll screen out usually about 340, 350 stocks. Here's 377. And so I am not particular at all as to which stocks I trade. Um, I look for good structure in price action, something that seems and looks like it would be predictable as far as its supply and demand levels, support and resistance levels and that's how I gauge my trades. I don't care what it does. I almost never look at the symbol. I look at the daily chart and the weekly chart, and I ask myself, are prices coming anywhere near a supplier demand level? Does it look like it's going to be a breakout or a reversal candidate? And if it does, I will then come down and I will look at implied volatility. This is a gauge that we use to judge whether or not options are expensive relative to their historical, past in the last year. Are they relatively inexpensive or cheap right now relative to the last year? Or are they kind of in the middle, right, of the range? So the red zone would be very expensive options. The green zone would be very cheap options. And the middle white zone would be fairly valued. And this tells me which strategy I need to choose to ultimately not get side swiped or not get too badly hurt by a volatility move that goes against me. So if volatility were to rise, I'd want to be long Vega. If volatility were to fall, I'd want to be short Vega. If volatility were in the middle of the range, I'd want to be as neutral Vega as possible, Vega being our sensitivity to option volatility. This way I can just purely rely on the stock price doing what I need it to do. Um, and if volatility is cheap, I'll generally be a buyer. If volatility is expensive, I'll generally be a seller. And if volatility is in the middle, I'll spread trade. And when I say I'll generally spread trade, I would say because of how infrequently prices, implied volatility, so option prices are extremely high or extremely low, um, how infrequently that happens, I would say probably unless we're talking selling cash secured puts or selling naked puts for income, for passive income, I am 100% of the time spread trading. So if I want to trade a directional call option, I won't just buy a call. I'll buy a call at the money and sell a call at my target. I won't just buy puts if I think the market's going to drop. I'll buy a put at the money and I'll sell a put option below current price near my target. And primary reason I do that is because I despise negative theta. Time is something that you and I will never be able to stop. And every day you buy an option, every day you bought an option and now you're long that option position. Every single day you're in it, you're losing money relative to that day passing. Every 24 hours, you're losing a little bit more money, a little bit more money, a little bit more money. And 10 days goes by, 20 days goes by, 30 days, a month, 6 months goes by, and all of a sudden you're just all this negative theta, all this time decay is eating away at your potential profit. So you're going to lose more than you anticipated. You're going to make less than you anticipated if the price of the stock takes a while to do what you think it's going to do. And so to negate, or not completely negate, but to reduce exposure to negative theta, I will always spread trade. So I'll take a long position in a call, and I'll take a short position in a call on the same stock at the same time. And usually those are vertical spreads. I use the word usually, but now that I think about it, it's always a vertical spread. Um, so I'm using the same expiration month, just different strike prices. Does that make sense, Abe? And by the way, Abe, if you're like, I'm new to options, you just said things that make no sense to me. Or maybe I did, make sense to you. That's great. If it is, that's great. We do have a lot of content around options, starting from the very basics. What are calls? What are puts? What is volatility exposure, time decay exposure, all the option Greeks, how to avoid exposure, how to enhance exposure. Different strategies offer different exposure to the Greeks. Some you may like exposure to, some you may not. Yeah, the video library here, Ian, is, I think about the library of content we have here, and I am logged in, I think, right? Yeah. And I'm pretty proud of it. you know, between, and these are just all the live stuff that we do, trading rooms, wealth essentials, crypto, stocks on the rocks, all that kind of stuff. So, but learning to trade using charts, rules, scoring systems, additional enhancers to the trade, options, simple basic options, advanced options, getting into hedging techniques and stock repair techniques, wealth management, type stuff, retirement, more passive stuff, futures, crypto, trade plan, Thinkorswim platform tutorials for the most part. I mean, we have a couple of the tutorials from TradeStation and Tradier in there, but mostly Thinkorswim. But it's pretty extensive. It's pretty extensive. So if you haven't had a chance to check it out or want to, this is all included in either the on-demand or pro membership. So you have access to all this stuff 24 hours a day, 7 days a week. So great question there. So then we have Sava coming up with some interesting questions. Check this out. Have you ever looked at GEX maps and net drift premiums on options? So I've looked at GEX maps. I've looked at gamma exposure before, and there's some pretty phenomenal stuff going on there. I haven't used quant data. I've been checking out Geeks of Finance, and I've been checking out Spot Gamma. Um, and I don't know enough yet to bring it up and really dig deep into it. But it's a theory that option dealers, so market makers and dealers, have to be on the other side of our trades. And so the theory is that when people are out there, retail traders are out there trading calls and puts, a majority of them are selling calls and buying puts. Now, that's the theory. I don't know if that's true. I don't know if you could really point to evidence that says, well, they're always selling calls and they're always buying puts, selling calls for covered calls and buying puts for hedging. And I'm like, well, in all fairness, I know plenty of people who are selling puts for income and buying calls for speculation. So there's just a little theory there. But the part that's not theory is that market makers and dealers have to take the opposite side of our trades if there's no one else there to take it. And so they naturally will delta hedge. Um, their goal is to not be any, delta positive or delta negative, and they need to consistently hedge to maintain a neutral-ish delta. But the secondary Greek to delta, which is gamma, is going to change a dealer's delta exposure, because as prices get closer to at the money, where large positions may be stacked around certain strike prices, they may have an overly positive or overly negative gamma. And what needs to happen in an overly positive or overly negative gamma is dealers need to start hedging even more than they were to maintain or continue to try to maintain a neutral delta, or get as close as possible. Um, so when you get into these large overhead, gamma clusters or below current price gamma clusters, dealers may have to, it's not even they have to start buying shares or futures contracts to hedge their exposure, or shorting or selling shares or futures to start neutralizing their exposure to that gamma. And so I am new to the subject, but it's pretty fascinating. And I think what everybody has learned about technical analysis, from support and resistance to supply demand to all these patterns that represent when price breaks through an area, and then comes back to retest it. I think the origin of all of this, all of it, is hidden in gamma clusters and dealer exposure. I don't know enough about it yet, but I'm in the process of figuring it out, Sava. So yeah, great question. I went down a wormhole the other day on how firms like Susquehanna, International Group trade options. Really neat. Yeah, it's pretty amazing. And there's a few resources out there that we're checking out. Um, But the issue that I have right now is there's not a lot of is there, and yeah, if you want to send me a video, that'd be great. I'd love to see it. But is the couple of websites that I stumbled upon that seem to be the most talked about, as far as I've found so far anyway. They don't really, they have education or they have videos like tutorials or like webinars and things on the software aspect that they have, their dashboard to look for these dealer clusters and gamma clusters and all this stuff. But they have no training on it at all. Um, on like certain like I understand gamma exposure and I understand why dealers would have to hedge at certain areas and all that kind of stuff. But then you get to the platform and they have no training on it. It's weird. It's like they expect you to know all of this coming in. And so it's very piecemeal. There's no real education on the subject. There's only like kind of just talking about it, not really education, not really specific, while they're using the software that they provide. So that's what I said. I mean, I'm very new to it. Probably 6 weeks new to it, 8 weeks new to it. I've learned a lot, but I don't know enough to teach on it. So it's very, very fascinating subject, though. I will tell you that. It's very fascinating. They have positive and negative gamma exposure and delta hedge with the underlying with shares or puts. Yep, that's right. Or futures, right? Or futures, depending upon what you're trading. I have one guy that does it all in Excel. That could be interesting. And I'd like to see that. The interesting part that I've noticed is that gamma exposure, delta exposure changes throughout the day too. So now if you're using it on like zero DTE positions, it changes a lot throughout the day where these gamma clusters are. Um, and I've been kind of on the side. I'm not trying to hide anything from you guys. I don't like to do that, but I'll say this out loud. I just don't know enough about it to present it. But in our wealth essentials positions, and even some of the most recent, bull put spreads, bear call spreads, I'm kind of off to the side looking at not zero DTE, but total gamma exposure at certain levels and these dealer clusters that should act as support or should act as resistance. And I'm looking at them and I'm correlating the short strikes of our short puts and put spreads and short call spreads. And I'm looking at it to see if there's something there because, ultimately, if there's a cluster of high gamma below current price, and we can sell an option below that price, knowing that dealers are going to have to come in and start buying the underlying to push prices back up at that level, then I'm looking for a correlation, an edge, as you would put it, Ian. I'm looking for an edge to keep stock prices away from my naked puts and my short puts, right? So I've been kind of on the side, low key doing that. And I say that out loud. I don't mean to like be like, hey, why is Corey hiding this? I'm not hiding it. I don't understand enough about it to teach it. So I'm just kind of looking at it and correlating it to what we already know about supply demand support resistance. And so if there's something there, and once I feel confident enough to actually, teach on the subject and bring it into the equation, then of course it's something that I want to feel confident in because I hate guys that just teach stuff without actually knowing it. Like that's going to get exposed really quickly. And I don't feel like I know it well enough, like as a whole. Um, yeah, Saba, I'm paying like $400 a month now in subscriptions for this exact subject. Just this subject,
Oh,
Saba.
there you go.
$400 a month.
Yeah, this is like $59. So I'm
Yeah,
trying it out.
so
Trying out for a month. We'll see.
try it out. Yeah. And I see benefits of both of the subscription services that I subscribe to, and maybe there's a reason to keep both. I don't know yet. Again, I'm not even 2 months into the subject, but there's something there. Uh, there's something there for sure. But it is too new to me to be bringing it into the fold here. But that's a great question. I'm glad you brought it up, Saba. Let's keep digging, shall we? I don't do any of this, but I understand 90% of it, and everything you're saying makes perfect sense. Yeah, that's yeah. I'm right there with you. And
What you're saying about how the big boys are covering themselves, you
yeah,
can
yeah,
describe that 100 different ways, and that's where it all lies, in my opinion.
right.
That
Well,
is
it's
the
not even
market.
it is the market, and it's not even big boys like and unless the big boys we're talking about are the actual market makers and dealers of specifically options. I'm not
I
even talking
suspect
about like
they're mostly
consultants.
filtering in money from other people, and it's not 100% their own doing.
Probably not.
I don't
Probably
have
not.
anything to back that up other than staring
Yeah,
at a
it's
chart for
crazy.
10 years.
Yeah, no, it's crazy. It's crazy how you can look at, I mean, you and I'm watching some of these 1 minute and 5 minute Gex charts, and I'm going, well, if I'm reading this right, price should bounce right around here. Or it should rip right through this area. And I'm like, I'm shocked. I'm like, it did exactly what it was supposed to do. And if you can correlate it, which 9 times out of 10, it correlates with some technical thing that we know, which is some support or resistance level, some supplier demand level, some breakout move. Like there's something there. And the root of everything that we've been studying, personally, that I've been studying for 20 years, I think is built into this. So it's pretty exciting. But again, don't know enough about it to teach on it, which is why I've been kind of keeping it on the side a little bit. But when we know more about it, it's pretty badass. So pretty cool stuff.
So I'll expect a video on it by this time next week.
You got it. I'm
Yeah,
working. I'm currently working on a
working on it, working on it.
Ian, I'm about 90% of the way through our next on-demand course. I've already got the marketing in place. I've had the marketing in place. It's going to be a very expensive class, and it's going to be $10,000. No, it's not going to be any of that.
Oh,
Uh,
fantastic. Fantastic. I'll only
man,
take 51%.
I will say, of all the people you will find on the internet teaching trading, we will not teach something until we know it fully inside and out. So don't expect a course on this anytime soon.
Herman
Uh,
and I have had the same discussion on stuff.
yeah,
Same topic.
yeah, yeah, yeah. I'm not launching a course until I confidently know that I can teach it and you can make money with it and it's relevant. Senior discount. Senior discount. That's right. We'll offer a senior discount. It's not going to be $10,000. The senior discount is going to knock off 99% senior discount when it's launched. And I say that like
Some
it's
of us
launched.
seniors might not live that long.
Well, I hope we figure it out sooner than later. It's actually pretty awesome to watch. I just need to understand it better so I can teach it better. You know what I mean?
I suspect this general topic can probably be applied to all asset class in one way or another.
I would say 100% if it has options on it. And I think
Yes.
I think the key to it is it has to have options because that's the only asset class that has gamma exposure, which gamma changes the amount of delta your position has. And so you get into one position in options, it has a 45 delta, and the stock starts to move, gamma is going to affect your delta. And all of a sudden, if you're a dealer and you're overweight long delta or short delta, and gamma is the gas pedal of that, you're going to need to start hedging more or less. And the hedge to that is inverse what the market is doing. So if the market's rising into a large gamma exposure, like a large GEX area, dealers will have to start sorting that. And if prices are falling into a large gamma exposure, dealers will have to start buying into that level. Yeah, it's cool. Just need to understand it more. What the next cool new options thing you're teaching? Well, this is probably going to be it. All right. This is probably going to be it, but I got to learn it. I got to know it better. So, and I wouldn't have even brought it up because I'm still in the learning phase. Except you brought it up, Saba. So thanks a lot. Now I look like you don't know everything. I don't know everything. I don't know everything. There's something here, though. There is something here. We'll figure it out. We'll crack the code on it. Um, let's see. Have I ever heard of SIG? I don't think I have. Out of Philadelphia, I have not. Was learning a bit more on convexity and how it applies to options. Yeah, this is a whole. This is going to be this is a rabbit hole that goes deeper for sure. What is my take on supposed AI-ish tools? I mean, I haven't used any AI-ish tools. I mean, I've used AI tools to write indicators to kind of test some of that stuff out. I haven't tested out or looked into any like AI stock picking services or anything like that. I have to imagine there's like AI is still relying on indicators, and I feel like we've we've watched that movie before. I feel like there's been a lot of companies, even before I even started trading, when I started learning about companies like Invest Tools and Better Trades, and I started to teach me to trade, and all these indicators that stack up, and you get these 3 green lights or 3 red lights, and that'll tell you when to buy and when to sell. And I feel like, you know, how much more is AI going to be able to provide without looking at indicators, right? And indicators are always lagging, right? And so I have not looked into AI for trading as much, but I do feel like um, it's just the new version of using 3 or 4 different indicators to give you a green light or a red light, which is all lagging. So, um, sometimes we're late to the party. I don't love being late to the party, but if we're, but mostly when you're looking at this 3 green light, 3 red light signal, you're going to be very late getting in and very late getting out. If AI can improve upon that in any way, great. I don't know that they can, because my guess is it's still building that outcome or that signal off of indicators. So I think it's a fancy way of repackaging what's been done for decades. But I don't know. I don't know enough about it. Yeah, I agree. Here we go again. The only leading indicator is price and price itself. Well, price, except the leading indicator could be gamma exposure, which then would make price a derivative of gamma exposure. So, just throwing it out there.
Why
Just
is
keep.
all your discussions consistently swirl around multivariate insanity?
Yeah, always, always. What was interesting is for the longest time, and I probably misspoke a whole bunch of times when I was teaching um, about how options drive the stock price. And I'm like, no, no, no. Options are a derivative of the stock. The stock moves, the option changes. You've got it all wrong. And not like anybody was ever adamant about options drive stock prices, but as I started digging into this Gex thing a little bit more, gamma exposure, I was like, holy schmoly. That would mean that option trades, not option prices, but option trades, especially large clusters of trades around certain strike prices, actually can and probably do drive stock prices. it was like a massive revelation over the last couple of months. I was like, if that's true, then price is actually more of a derivative of the options market than options are a derivative of price, which is interesting. That's kind of mind-blowing, actually. Now that wouldn't necessarily that's not going to apply to stocks that don't have options on them, right? That's not going to apply. Um, but and I'm not even sure that would apply to all futures contracts. I mean, most futures contracts are going to have options on them. Some of them are not liquid enough to trade. Some of them might be. But yeah, it's kind of mind-blowing the shift that I've been experiencing in just what I thought the dog was and what I thought the tail was. But again, don't know enough to teach on it yet. So not trying to go down a rabbit hole as far as like, well, here's what I know. There's certain things I know, but certain questions I still have. And so I think it's a subject that we just continue to learn together on, which is going to be awesome, I think. Insurance and taxes drives the price of almost everything meaningful, so options definitely fall in this category. I would agree with that. It's a great analogy, Ian, right? That's a great analogy. Kind of like the kid in the Matrix movie. You must realize there's no actual option. There's no actual derivative. Yeah. Yeah, it's wild to think that the stock price itself could actually be the derivative of the option dealer's exposure, which is actually mind-blowing to me, right? But I mean, it makes sense. Like when you think about it, it
When you
actually
shoot that
makes
through the prism of the stock price has nothing to do with how much money the company's generating, how
also
much
that.
money they're paying out, what their assets are. I mean, you can't try that crap with a building, put it
No,
that way. But with a
no.
stock, sure.
Yeah. Yeah, it's pretty mind-blowing. You know what's more mind-blowing? I'm just learning about this 20 years into my career. It makes me think, what else don't I know? And I've done pretty well in this business. Um, but it's like, what else don't I know? But this is pretty fascinating stuff. So Sava says, be like water. While the stock market flows steady like a river, options are the crashing waves. Flexible, fast, and full of force stocks seek direction. Options become it. Finance Bruce Lee. Was that a quote from somebody else that calls themselves Finance Bruce Lee? Oh, Chat GPT. Nice. I like it. I like it. I like it. Yeah, I've been using Chat GPT on this subject a lot too. So it's got some fascinating stuff to present. So it's not talked about a lot. Um, which makes me feel like if it's not talked about a lot, there's something really valuable there. Yeah, I'm on like week 8, 6, maybe 8. So I think the key to this, Sava, is once we figure it out, you be very careful. I don't like saying this, but you do have to be very careful. I mean, there's websites that are teaching this stuff. But I do think you have to be very careful because you could potentially almost like Fibonacci, like retracements. They stopped working largely because most people started using them, you know? And so you have to consider it, you know? It'll be replaced with something more complex. Well, I mean, if we're getting to the core of it, maybe, maybe not. This feels like we're getting to the core of why prices move. Feels like it to me. Yeah, I'd like to see what you come up with, Sir Sava. Yeah. Honestly, they're not going to take her ball and go home. They're just going to move the goalpost. I mean, I think that's what ends up happening with Fibonacci, right? So a lot of the Fibonacci retracements and extensions and all this stuff that became extremely popular. I think large institutional traders started to know that a lot of retail investors are using specific levels and how they're drawing their lines and
Fibonacci was the first and easiest thing they could program a machine to do.
right. But then I think they started to overshoot Fibonacci and not even like program things to do things because
Self,
Fibonacci
they took
level.
the self-fulfilling prophecy and then they started betting against it and
Yeah,
figuring out, well, gee, that means somebody will put the stop over here, so we'll blow through it.
right. Yeah, it's like the one interview I saw. I don't know who the trader was or who the person was, but he said, "Listen, he was talking about liquidity sweeps and stops getting hit and institutions and market makers sweeping stops and knowing where your stops are. He's like, listen, your life will change in trading as soon as you stop putting your entry price where you want your entry price and start putting your entry price where your stop loss is supposed to go. And when you put your entry price where your stop loss, it's an older guy, yeah. When you put your when you put your entry price where your stop loss was going to go, you'll be surprised at how many times it hits that price and moves in your direction. And I'm like, that does not surprise me at all, actually. Yeah, we have the same feed apparently, Shava. You know what I'm talking about? You remember seeing that? I've seen it a couple times. Yeah. I was like, that makes perfect sense, actually. Tornado season, Kevin. Will the 2% on 120 put for GRNC hold? GRNC is the first trade. GNRC. Sorry, it's GNRC. GNRC 120. I mean, 120 is, I mean, you got a little level here as if this is what you're trading off of, right? Um, I do love how it bounced off. I don't love that it didn't make new highs. That's concerning. Oh, here's my gamma exposure dashboard. Let's see if this comes up with it. G. So this has a lot of exposure at 110 and 115. Zero gamma is at 120. So that would be where the neutral gamma is. Sorry, at like 125. 120 seems like it's got nothing. But if you could get down to 115 or 110, I think the answer would be yes. If you can get down to 110. It's kind of how I'm looking at it, which I was looking at kind of looking at this level as 110s aren't really paying anything right now. 115s are right in that level. I mean, from a technical standpoint, we should see a bounce out of that area. And even if we don't get a bounce at 115, we should definitely get a bounce at 110, which then push prices back above 115. From what I know about gamma clusters. So I don't know what the tornado season was about though. What is that? Oh, Generac. That's Generac. There you go. Yeah, it could be a good time for sales. I mean, it looks like the momentum is trying to shift here. You know, this is the largest, certainly in the context of impulse move down, corrected move up, impulse move down, corrected move up, impulse move down, corrected move up, impulse move down, corrective move up. This corrective move is the biggest corrective move we've seen since this whole downtrend started. Momentum is way more positive now. We've got a little breakout move here. I don't know that I trust the 120 level, but I would trust the 115 level. Even if price broke down and hit 110 where that large exposure is, I think that prices will hit that and bounce. And the momentum would suggest that prices probably won't even make it down to 110. But if that's where the largest exposure is, prices may gravitate there and act as a magnet almost, possibly. But I like the 115s. 115s are paying, well, they're wide spreads. I mean, right now, obviously, you want to see if the spreads are going to tighten up, but if you can get, in the middle somewhere, obviously you're getting, I mean, if you can get in the middle somewhere around $1.45, it's probably roughly the middle, give or take, $1.40, right? You're getting $1.40 for 115 spread, short strike, price gets to 115, your risk is $320 roughly to make 140. I mean, that's within the wheelhouse of what I would be looking to do for selling cash secured puts. Greg says, weren't you looking at the MOBO indicator use in Thinkorswim? Like it, hate it? It's got some good value to it. The only thing that we've been studying daily MOBO, 3-day MOBO, weekly MOBO, monthly MOBO, and looking at the combination or correlation of the things that would support a specific move. And we got some interesting feedback from ChatGPT when we fed ChatGPT over 400 trades from the fund, um, which has a high success rate on winning trades. And, on the trades that go against us, the risk reward is asymmetrical, meaning we lose more than we stand to make, which is fine as long as you have a high enough win ratio. It's normal, actually. And so what we've been kind of tinkering with and asking it is, okay, of the 78, almost 79% of trades that actually are in our favor without ever violating the short strike, plus the 12%, almost 13% of trades that do violate the short strike but come back out of the money before expiration. So we're talking 82, 83% of our trades end up working out. We don't have to touch them. What is the common, because we track MOBO for everything, what is the most common story about MOBO that we can use that we might be able to use to find better entry timing, and not necessarily selling options on something that's dropping into demand? Well, if everything is pointing lower and all MOBOs are pointing lower, that turns out it's not good, right? So if you're looking at daily, 3-day, weekly, and monthly MOBOs and a combination of those, so it's giving us some pretty great information as we continue to dig into this. I don't actually hate it. I actually really like the indicator. It's really easy to use. It's like any other indicator, though. If you're basing entry signals off of MOBO, like trying to trade futures or trying to day trade stocks where your entry timing has to be perfect, it's not good. But for something like what we do with selling options where your entry timing doesn't have to be perfect, it actually looks like it works really well. So I do like it. And it's the MOBO Advanced, Greg. So when you search in Thinkorswim, the indicator looks like this, just red and green, red and green, red and green. And it's MOBO stands for momentum breakout, right? So anytime prices break out of one side, you get into this, and prices are outside of the bands. You're in MOBO, you're in a momentum breakout environment. If prices come back inside the bands, you are no longer in MOBO. And it could be something as simple as, and I love this for even longer term stuff, right? So like people are like, oh, well, when should I close my I'm long SPY. When should I close my spider position? When should I dynamically hedge? I mean, you could use something as simple as Mobo, and as long as Mobo is green, you're long. If it turns red, you're out. If it turns green again, you're long. If it turns red, you're out. I mean, think about it. The last drop that we had, which was all on tariff talks, this is a weekly Mobo. Um, Mobo turned red March 3rd, the week of March 3rd. And if you're like, oh, Mobo's red, I need to get out. I mean, you saved yourself 17% if you're long stocks, long mutual funds, things like that. Now, we didn't turn green again until just 3 weeks ago, so you missed out on a whole bunch of, upside. So it's not perfect. It's definitely lagging. But for those who are just investors, just looking to manage longer term positions, um, when to get out, when to stay back, when to stay in, when to get in. Yeah, I would treat this just like how Chuck uses the 8 and 20 EMAs. Just like that. Just like that. Just use it on a weekly or a monthly chart. And you can play with modifying the settings and all that stuff. I mean, if you're on a monthly chart, look at how long you're in, right? So Mobo has you in basically from March of 2023, when Mobo crossed this line. My trend line on this chart is not working. Of course it's not. Why would it work? And it didn't get, I mean, it did get you out on this last drop when the tariff talks. But it kept you out of the market this whole decline in 2022. Something as fast as like COVID, when the market dropped so fast on COVID and the whole world shutting down, the timing was horrific on that, right? You're selling at the bottom and you're buying, right back at not the top, but you're buying, well off of where you sold. But COVID looks so tiny right now, I know. But for the most part, Mobo can be just a great, easy visualizer. It's kind of like zigzag. How do I look at the trend? Throw a zigzag on your chart. It'll tell you if you're in an uptrend, downtrend, sideways. Mobo is kind of like that. But um, it's not a leading indication of anything. It's just kind of oh, Mobo's this color. Oh, that makes me feel better. You know, so some cool stuff in there. It's indicators, though. I mean, indicators are always going to be lagging to a certain degree. So I feel like for what I do, my option trading is fairly passive. I don't generally need the most picture perfect entry timing with options, especially if you're a large option seller. And you're not trying to trade a particular direction. I think something like Mobo actually does a pretty good job at keeping you out of trouble. And getting you into, a little bit better entry timing is what we're finding. Now you get a COVID or you get a tariffs that just come through and just the market just landslides. Well, I mean, you're gonna get caught off guard by those events. They don't happen that often, but when they happen, they're violent, you know. And Mobo is going to be very late to react to that. All right, look at that. And just like that, an hour gets eaten up. Isn't that amazing? This is fun, though. I did not expect to go down this rabbit hole. Sava. Thank you, Sava. No, that's awesome. I actually
Thank you
love it.
for our interesting evening, my friend.
I'll tell you what, there's going to be more on this. I don't know when, but it is something that I think needs to stay in the conversation. So Sava,
I'm going
you
to be
said
looking at it too.
you were gonna send me some stuff. If I find it, obviously, if I find anything interesting on it, you guys will be the first to know. I mean, there's interesting stuff, but again, like I said, I don't know enough about it to teach on it, and I think that's where I mean, I do want to avoid that because I don't want to. I feel like that's all over social media right now. People just teaching stuff that is just
Yeah, it's all
nonsense, right? So I don't want to teach on something and have it hurt somebody or not help somebody. So I'm just trying to learn more about it before I present it, but there's something there for sure. It's really interesting. Like the most interesting thing I've come across in a very long time. Um, I'm like, wow, this is like could be the root of everything we've ever learned. Like that deep. It's crazy. So, Bill Cruz says it's funny how things look so differently recently. Just turned 75. Congratulations. Just keep hoping to learn enough. I mean, there's always something to learn, right? Yeah, ChatGPT and screenshots works really well. I've been using ChatGPT to kind of redesign a section of my backyard that I don't love, and it does amazing things. It's like goodbye to like designers. Some weird stuff, man. It's AI, man. Back to your earlier question, Greg. I mean, there's something about AI, but the scary part is with this VO3 that Google just came out with. Um, I'm sure you guys have seen a lot on that. But what's scary is if that's available to us now for $120 a month, how long have they been using that against us? Because they didn't just come up with it and be like, oh, let's sell it now. That shit's been around for so much longer than they've led us to believe. So what else has actually been fed to us that looks, I mean, too real, to your point, Sava? Far too real. Like, I'm like,
Welcome to the dark side, my friend.
I'm telling you.
Welcome to the dark side. I've been there for years.
It's scary, Ian. It's scary. God help us, right?
Herman yells at me for diving down a rabbit hole too much.
He yells at you. I don't see Herman yelling at anybody.
Well,
His
no,
version of
I'm
yelling,
I'm blessed that we've become good friends. I'm blessed.
it's his version of yelling, which is not
Yeah,
yelling at
exactly.
it's like a little teddy bear.
Because I told him even at my advanced age, I punch back.
I bet you would. I bet you would. All right. Well, this has been an awesome conversation, actually. This woke me up, but now I'm gonna go have some dinner and I'm gonna call it a night sooner than later because I tell you, it was a late night. But I've enjoyed this conversation tonight. Appreciate you guys as always. Let's see. Got to get to the X22 for the evening. There you go. Quant data. I've heard about that one as well. Like I said, I already subscribed to two. So what's another one? It's only money. But yeah, that one has come up in my research as well. So I'm trying to figure out who has the most value, and right now I can't decide between the two websites I already subscribed to. This being a third one, we'll check it out, and maybe there's value in all of them. I don't know. I don't know. But even if you're paying $400 or $500 a month for something, if it makes you at least that, then who cares? Who cares what it costs? You know what I mean? There's obviously a reason that Bloomberg and Reuters terminals cost 20 grand a month and institutions still pay for them. You know? Maybe that's more now. Yeah, yeah. 28,000 a year. Yeah, when I started, it was like 20 grand, 30 grand a month for those terminals. So maybe it's gotten cheaper. I don't know. It's not something I'm paying for. Yeah, but like everything, like even trading commissions when I started. I mean, and I started not late. I mean, it was 20 years ago, but um commissions when I started for options were 12.50 a ticket plus 65 cents a commission. A contract for options, 12.50 ticket charge plus, so that was for the whole trade, plus 65 cents per contracting commission. And that was whether it was for stock or options. So for stock, it was just $12.50 to get in, $12.50 to get out. And I remember feeling the effects of that when my very first trade ever in 2006 was on Apple stock. And I bought 10 shares. I think it was 10 shares. I know I made $50 in the trade. And that was a huge win for me. Very first trade ever. But it cost me $25 in commissions. Goodness gracious. How's this gonna work? But that was cheap because even my instructors were telling me that they had $200, round trip commissions for stocks. And I'm like, you had to be really good at what you did back then. They were like, yeah, damn right you did. Nowadays commissions are nothing. So, yeah. Cost of doing business. And if there's websites that provide information that can lead you to overall more consistency, um, and better insight to where market prices are expected to move or bounce from. Um, if it's $100, $200, $300 a month, I don't care what it is, I'll pay it. I've got one right now that's $300 a month and the other's 100. That's where my $400 comes from. So a month I'm paying for that. So we'll see. Hopefully it's useful. If not, I, I don't think it's not. There's something useful there. The question is do I need to pay for 2 or 3 different websites to get what I need? Right. And just pick one. And I'm not going to pick the cheapest one. Don't be cheap. Um, I'm going to pick the one that offers the most reliability and what I'm looking for. So yeah, and both of the ones I'm looking for right now will segregate total open interest and total gamma exposure versus zero DTE gamma exposure. So they both do that. Um, One actually separates negative gamma from positive gamma. One is just total gamma. And there's value in both, I think, but I haven't nailed it down yet. So we'll see. I appreciate the insight that you've been finding there, Sava. Um, and I'm going to look into this too. So to be continued. Appreciate you guys being here. Yeah. Sava, you know what? I'm actually glad that I knew what you were talking about because it's embarrassing. If you say something, I'm like, I don't even know what that means.
You definitely explained it spot on, especially when I was talking about what different market makers do
Yeah.
with the positive, negative gamma and how they actually delta hedge. They'll leg in with whatever the first market maker order is that they're filling in. Maybe it's calls or puts, and then they'll do the opposite. I'm going to sound like an idiot now saying it out loud, but they'll offset the first leg. They'll try to offset the delta first, or no, they'll offset the delta, then the remaining gamma, and that's what the video I put up top shows. And then whatever the remaining delta is that they couldn't hedge with the options, they will then use the shares or the futures contracts to kind of
Right.
they'll do it in like 3 pieces, just how exactly how you said it. So
Right. This actually got me really interested too, and I'll say this and then we'll take off because I know we're past the top of the hour. But in our summit, we had a couple of online summits and then we had our Anaheim summit. And one of the folks that came out, his name is Lex Luthringhausen, and he's the VP of product over at Tradier. Some of you guys have met him, you know him, you've seen him. Um, yeah, so Lex one of his big, I guess, selling features, but really just nerdy feature about Tradier is they actually get into gamma clusters, gamma exposure, charm, and Vanna. Um, and that's what actually sparked me thinking about it. I'm like, there's something there. When he keeps talking about this subject always comes up. He's always talking about it. What is that? So Tradier has some information on like the platform has um gamma gamma exposure, charm, and Vanna exposure. And I'm like, okay, Vanna being a derivative of, well, it's actually a second order. I don't even think it's a third order, but it's a second order Greek. Same with charm, as it relates to volatility and time decay. Um, that's Vanna, and time to expiration and time decay, that's charm. So that's what got me started down this rabbit hole. And then I started going deeper and it's like, can I get everything I need from Tradier, the platform? Maybe, maybe not. I need to have Lex teach us on that. And that's when I started going down this other, rabbit hole and landed on spot gamma and geeks. And now we've got, quant data. So, and I've heard of quant data before. I haven't subscribed to it yet, but yeah, there's something here. We're gonna figure it out. All 10 of us, 11 of us. Yeah, I want to say that would be Vanna, right? Yeah, it's Vanna. Yeah. So, all right. To be continued. This is awesome. Appreciate this, guys. This woke me
Thanks,
up.
Corey.
Thank you for a good evening. Go have some food, man.
I'm gonna have some
Yeah,
food, something
we-
quick, something easy, and then it's gonna be lights out. I mean, it's only 6 o'clock. This is terrible, but I'm tired.
I hear
Led
you.
Zeppelin night, man. It'll do it to you. I got another one of these nights coming up on Saturday. So I got a show tomorrow night I'm going to at the House of Blues. And I got a show. My son's playing again at the Greek on Saturday. It's my wife's birthday. So Sunday will be a day of rest, hopefully. All right. Be good, everybody. Appreciate you guys being here. And
Take it.
yeah, hit us up if you need anything. I'm here to help. All right. Later, y'all.